my colleague Bob Blumenfield. Madam Clerk, can you please, we would like to take item 1 and 2 together. And can you please read both into the record?
Okay, on item 1, you have a controller report relative to the fiscal year 2013 and 14 audit planning letter. And on item 2, it is also controller reports, and this has to do with fiscal year 2013 and 2014 audit engagement letter for the sewer construction and maintenance fund and for the city's annual audit.
Okay. The Controller's Office here. Good afternoon. Are you giving us a brief summary? Would it be you or?
I was going to go ahead and invite the auditors up here. I'm Todd Bowie with the City Controller's Office, and the Controller's Office did transmit these letters from our newly engaged auditor to the council, and the auditor is here, MGO is here to speak to you and talk a little bit about their audit.
And just to add to that, Matthias Farfan from CLA, in the future, usually when you'll receive a transmittal from the auditor, it usually will receive a controller cover letter in order for city clerk to receive it and put it on the agenda. So for the most part, it'll just be a controller letter stating attached is XYZ from the auditor. And that's the case with these 2 items.
Right. Okay.
Good afternoon. Jim Godsey, partner with MGO. And I'm not going to have everybody come up to the table, but with me today are members of the key members of our team. Jean Horimoto, director, Lita Hendronata, our manager, and David Kwan, who's the senior on the engagement. Thank you for giving us the opportunity to come through and meet with you all today. What I would really like to do is focus primarily on the first agenda item. I think that's going to, the actual engagement letter, which is the second engagement item on your agenda. It's a little bit of more of a repeat of some of the items that are in the original letter. So, and it's really the original letter. This is part of what we call our required communications. So under audit standards, we're required to come through during the planning stage of the engagement and communicate our responsibilities and what we're going to be doing and how we're going to be doing it in general in terms. And then we're going to do the same thing at the end. After the audit's been completed, we've issued our reports, we're going to come back, at least we're going to have written, and if you would like us, we'll come back and also make an oral presentation to you all as far as, what the issues that we identified during the course of the audit, any difficulties that we experienced. So you all have got the letter in front of you. I'd be more than happy to go through this in overview format. I can go through it in more detail, whatever pleases the committee.
An overview would be fine. Did you want something more detailed?
Okay. Let me then hit some of the highlights. So we've been engaged to audit the financial statements of the governmental activities, business-type activities, each major fund and the aggregate remaining funds of the information of the City of Los Angeles. This is for the period ending June 30, 2014. Separately, and we talked about that in the second agenda item, we also have separate deliverables for the Sewer Construction Maintenance Fund, the MICLA, which is the Municipal Improvement Corporation, the Mobile Sources Air Pollution Reduction Trust Fund, the GAN limit calculation, and the cost allocation plan. So those will all be separate deliverables, and we'll be issuing those reports after we issue the CAFR. What I really wanted to talk about today is our responsibility under generally accepted auditing standards and OMB Circular A133. The OMB Circular is dealing with if you receive federal financial assistance, you're subject to the Single Audit Act, and so that has some additional standards, and it also requires that the audit be done in accordance with governmental audit standards in addition to generally accepted auditing standards issued by the AICPA. So our responsibility, the purpose of our audit, is to express an opinion about whether the financial statements which are prepared and are the representations of management, are those financial statements fairly presented in all material respects in conformity with generally accepted audit accounting standards. There's a couple of key words in there that I really want to emphasize. Fairly presented in all material respects. We are not doing a validation, 100% validation. Depending on your backgrounds, you may be more familiar with that than others. We've got this thing we refer to all the time, the expectation gap. And the expectation gap is the difference between what the standards say our responsibilities are versus what many users think when they hear audit. What does that mean? And it's not. Our work is going to be done on a test basis. The rationale for our test work is going to be done based upon risk. So the basic audit is going to start out, and our planning session did start out by coming through and saying, where is the risk of material misstatement in these financial statements? What do we think that risk is? Where is it at? And then we have to go back and plan our audit to do enough work to reduce the risk of material misstatement down to a low level. That's the professional standard that all CPAs have to do during the course of the audit. So as part of that, it's judgmental how much work we're going to do in any particular area. We're certainly going to spend more area in those high-risk areas than we are in low-risk areas. But we're going to, overall, the objective here is to make sure that the risk of material misstatement is low. So that's where we're going to keep auditing until such time as we're comfortable with that. In planning the audit, we are going to look at and understand the city's system of internal control. We're not going to come through and offer an opinion or any other level of assurance on your internal controls. We're going to look at those internal controls so we can do our job of planning the audit and do the most efficient audit possible. So we understand the critical controls in the accounting system for over financial reporting. And then we're going to look at those risk areas and we're going to decide, how is the best way, the most efficient way to audit that? Sometimes we're just going to go to a third party, an independent third party, and we're going to confirm with a bank or we're going to confirm with your lender that this is the amount of the bonds payable at this point in time, or this is the amount of cash in the bank statement. Other times, we're going to say, we can't. There's not a third party that can, we can easily or directly validate your revenues, your expenses. There, typically, we're going to be relying more on your internal controls. So it's going to be a combination of testing of internal controls and substantive test work, third-party substantive test work. That's how we're going to get down to that level of comfort, low risk. Now, that work we're going to do on internal controls, I want to repeat because it's very important that it's not going to be enough work for us to render an opinion. Anything that we would find, any material weakness or significant deficiency in your internal controls that we identify, we're going to report back. But because we're not auditing your internal controls, not giving an opinion on internal controls, there may be other weaknesses that we didn't identify during the course of the audit. So that's probably the most critical aspect that, in the most common misunderstanding as to the responsibilities of the external financial statement auditor. We also have a responsibility for compliance. So we're going to be looking at your laws, regulations, contracts, and grants, where lack of compliance could have a material impact on the financial statement. So any of those areas that we identify the risks that could be material to the financial statements, we will be doing additional work on to make sure that the city is in fact complying with those standards. The next area in here is talking about other information contained in the report. And if you've seen, at this point in time, for the city and all major governments, the CAFR, which we refer to as your basic financial statement, the Comprehensive Annual Financial Report, it's this thick. It's a huge document. And included in that is a number of areas. Some of that is the basic financial statements. That's what we're opining on. That's what we're going to give you an opinion on. In addition to that, there's management discussion and analysis. That is prepared by management. It's designed to assist the reader in understanding. We do not provide an opinion. We look at that MD&A. We make sure that it's correct in relationship to the financial statements taken as a whole, but we're not giving you an opinion on that. Likewise, there's also required supplemental information in the financial statements and other just supplemental information. Both of those situations, we're doing test procedures, but they're less than what we would have to do to opine, to give an opinion on those. Again, standard type information, but I wanted to share that with you. The next area is the plan scope, timing of the audit. I've already talked about this is being done on a test basis. We're going to be looking at the evidence supporting the amounts, and not only the amounts in the financial statements, but just as importantly, and maybe even more importantly, the disclosures. Most of your audit failures that I've seen over the last 20, 25 years have really come from lack of a disclosure. The basic numbers were there, they may have been right or whatever, but there was a critical disclosure that was missing in the financial statements. The best example that I can go back to that everybody can relate to is the city of San Diego. And in 2001, they issued their financial statements. It was really the CPA firm was doing these financial statements almost on their own. There wasn't a lot of input from management, etc. They took those financial statements and it became part of a bond offering. And after it was used as part of the bond offering, people realized that, whoops, there's no disclosure in those financial statements about the deal, not the deal, but the agreement between City Council and the Retirement Board. They had come together and they had made an agreement that we're going to defer or just reduce the amount of the annual contribution in exchange for, some increased benefits, etc. Nothing inherently wrong with that. It happens all the time, all over the state. But that disclosure didn't get into the financial statements, and therefore, all of a sudden, you've got securities fraud. And you had, the U.S. attorney coming out, everybody. It cost them, they spent $40 million just investigating what happened. It was just, the city was in a situation for 8 years, where they weren't in the bond markets because of that. It took them that long to recover. So, not a situation you want to be in. That's just an example. I throw that out there as an example of the importance of the note disclosures. I've talked about material misstatement, and it shows here on about halfway through the next page, the second page. It talks about material misstatements may result from 1, errors. Errors happen. 2, fraudulent financial reporting. That can happen as well. Misappropriation of assets, somebody stealing your assets. And lastly, violations of laws and laws or governmental regulations.
How are the material misstatements communicated to the city?
Material misstatements would be communicated in the form of one of two things would happen. Is either it's going to be fixed as before we issue our report, and therefore we'd still have a report. We would come through, even though it was corrected. I mentioned to you we're going to have a follow-up meeting at the end of the audit. That would be communicated back that we had a audit adjustment that management ultimately agreed with, and was important to the financial statements. Or if management didn't agree to fix that, we would come through and we would, assuming we became aware of it, we would qualify our report. And instead of issuing an unmodified opinion, we would come through and issue either a modified opinion, qualified opinion, or an adverse opinion. Now, there's a lot of judgment, and this is where the professionalism comes into auditing, is to your ability to come through and to identify those risk areas, one, and secondly, to come through and do enough work to assure yourselves that the risk areas have been adequately driven so that the overall risk of financial reporting is low. And I think that's where MGO comes in. We do virtually all the largest cities in California. We do all the largest counties in California. We do, most of all the major airports and seaports. So we've got, and this team has the experience to come through working together, and we also consult with other members of the team. We've got 8 offices, 250 people around the state. So it's that joint effort, knowing what you all are facing, what the city of LA is facing, what all the other local municipalities in California, the challenges that you have. That's where the risk comes from, and that's what makes it easier for us to come through and use that and exercise that judgment. The last paragraph here, I want to mention just a little bit. The city's CAFR, ultimately the final product is going to include some organizations or departments that have been audited by other auditors. So you have Department of Water and Power, you've got LAWA, you've got the Port of Los Angeles, and then you've got, I think there's 4 of the retirement systems. MGO audits LAWA. The others are all audited by other CPA firms. We have responsibilities under the group audit standards. So we have communicated, and we're working with those other auditors to come through and to understand the scope of their work. If we find as they issue their opinions, if we find in those financial statements areas of concern that could be also important to the city as a whole, we're going to go back, we're going to talk to those auditors, we're going to make sure we understand so that we can fully work with management to document and disclose all of those issues in the financial statements. So there's a number of items here, I won't go through all of those, but we do have quite a bit of responsibility working with the other firms to ensure that those audits have been done and that any impact from those audits has been properly included in the city's comprehensive financial annual report. The last page here is really just our timing. This original timing was part of the request for proposal. So, and when we put it in here, it was, that was kind of based upon what everybody was hoping for, et cetera, et cetera. So clearly, the expectation is we're not going to hit that January 31st deadline. Probably the driving force behind that is, and some of the other people from the controller's office might be able to give more details, but for some reason this year, well, one reason I know, but the component units, the water and power and the port and the retirement systems, they were all a little bit later this year than normal. Typically, those are all due end of October, November, maybe middle November at the latest. And for some reason this year, well, I do know, the retirement system, I believe it was fire and police, no, it was the employees' retirement system. They took a little bit different approach. We've got a new standard that's going to have significant impact on the city next year. It's GASB 68. This is the new pension standard. And because of that, the pension systems themselves, they were impacted by another standard. Their standard was due this year, was applicable for 14. The impact to the employer, to the city, won't be until 15. So at least one of them, and if not several of them, their financial statements were delayed because they wanted the approach that they were taking, and they just weren't going to be on that same cycle. I'm not 100% sure. If you want, maybe, I don't know. Water and power came in, the second piece of it came in December 23rd. That was the power portion of it. They got 2, both electric and power. And that came in, which is kind of later than normal. So those certainly impacted what management was able to do as far as them getting their drafts to us. We're working very hard. Management has requested an extension with GFOA so that you can still get your certificate of excellence from GFOA. So we've got our hands full. It's a lot of work to do, and we need to get this done. But we're okay as we see it today.
Well, what progress are you making on the other 4, though? Those also had deadlines of December 31st. So referring to the Sewer Construction and Maintenance Municipal Improvement Corporation, Mobile Source Air Pollution Reduction Fund, and the appropriation limit calculation agreement.
All of those are in process.
Okay. Those also had deadlines of a month ago.
Yeah, correct. Well, at the end of December,
Yeah.
correct. What we've identified, or what we've, in our process of understanding the city and the city's systems and processes, we've identified a few issues, and they not only impact directly to the city's general fund, but they also impact these funds as well. So we're trying to get all of those issues resolved at the same time, so that we'll, probably the most critical, well, before we can issue the CAFR, we're going to have to issue these standalone reports as well, because they are part of the CAFR. So all of that's going to come down pretty much at the same time.
Which is when?
We're looking at this point, and our best estimate is going to be in March. The extension was through, I believe, March 31st. My biggest concern, honestly, is, well, it's a lot of work to get the work done, but I want to make sure we have time to come through and take the final quality draft and make sure it's vetted properly among all of the departments, among all of the functions within the city. So historically, the mayor's office is one to look at it. We certainly want to make sure that the CAO's office has a chance to look at it, et cetera, et cetera. That's kind of the unknown for me. We were here back in, for 10 years, ending 2002. So we've been out since then. So I don't know what the timing has been since then, as far as mechanically working this through all of the important people within the city that need to see this in draft format. So
the deadline of January 31st, that was already an extension?
that is correct.
So you're on your second extension?
Correct.
Do you have everything you need from all of the agencies and managers? I mean, is it now just a matter of you processing what you've got, or are you still waiting for?
We're still, I think we've received everything that we requested. There's still a number of items that we're going through and we have questions on, and so we're needing to go back to the departments, on that. We could have the team come up and I could discuss if you'd like. We could discuss very specific issues. I would say that there's still a couple of items that are of concern, but we've made tremendous progress in the last few weeks as far as closing this down and getting to that where we're going to have the what we believe is the correct information. Now, there's still a possibility that as we finish this work, that we're going to see an exception, that we might go back to the controller and say, this isn't in accordance with accounting standards and this adjustment needs to be made. So we're anticipating that, and then all of that is what goes into driving this thing out further into the month of March.
Are you confident that's all you need, March 31st?
This isn't a first-time audit. Obviously, we've been here in the past. But anytime you come into an organization of this size and complexity, that's where all the gray hair comes from, honestly. Especially that first year, you're trying to get back into it and make sure we've got a lot of documentation, historical-type documentation. Is there a guarantee? No. Is there a good probability, high probability? Yes. And we're going to make sure that we do everything possible from our standpoint to be able to hit those deadlines.
And the last time you worked with the city was in 2002? So we've had other...
Yes. I think it was Simpson and Simpson. And I believe it was...
Yeah,
I think it was Simpson and Simpson. It was from 2003. I think 2002 was the last time we were here.
And what's the role of the controller's office to move this along? Can you help get the necessary information they need, or?
Yes.
We do that. We also are preparing the financial statements as well. Most of the a lot of the information is coming from other departments, other sources, and so where the auditor does run into sometimes issues, maybe getting information, we also will try to lend ourselves to that conversation. You probably saw maybe several weeks ago, we put out a letter to all departments, really requesting them to continue to work with the auditor. We have limited means, of course, because we don't have any actual authority over any departments, and so it does become an exercise of just being part of the conversation with them and trying to get them to move along. But I don't. It's not an issue of departments not wanting to comply or anything like that. I do believe that there are some resource issues there with departments, and I think there are challenges also in terms of the amount of internal audit resources that the city has at its disposal. So whereas Jim is kind of alluding to needing to further vet things and test things, maybe some of that is less necessary if the city has more audit resources at its disposal so that the external auditor is not required to do that. I think about 4 years ago or so, there was a report that was sent to, I think, this committee that spoke to some of those types of issues relative to resources in city departments for accounting and for audit, and that I think that what the report found was that there was some drop-off relative to the early retirement program that had occurred and some of the budget cuts that had been occurring at that time, and then highlighted various risks. And I'd say, around since that time, not just this year, that the city has struggled to get all the financial statements prepared as quickly as it would like to. So it has been going into February on a pretty much annual basis. So when talking about March is about a month longer than it has been the past number of years. But I think also part of that is also that we have a new auditor going through learning curve and coupled with some of the other challenges that we had.
We have to get this done before the end of this fiscal year?
Yes.
How is this all interplaying with the open data? I mean, with the Control Panel LA, as we get all these new data sets, in some ways I would think it would make the auditing easier because we're getting this information earlier, we're putting it online. Is it helping? Is this related to that? Are you able to take all the data that you're getting in this audit and basically upload it into Control Panel LA and into our data, or is this really a separate track completely?
Right now, it's pretty much separate. I think that would certainly be something we would want to integrate maximum possible. Our biggest challenge probably right now has been the traditional reconciliation processes that the various departments go through. They're not what we had expected, or the reconciliations they're reconciling their data back and forth between databases, but not necessarily to the actual accounting record that is the basis then for preparing the financial statements. So in some situations, we've had to go back to the department and ask them to do a separate reconciliation to make sure that these numbers that are showing up in the general ledger, the city's general ledger, are in fact reconcilable back to all their detailed transactions. So it's been challenging, but it certainly is going to get better. We're asking some questions that haven't been asked for a while, so it's catching people a little bit off guard. But everybody's really working hard. Everybody's trying their best to come through and work with us and provide us with the information as quickly as they possibly can. Todd and his group have been absolutely invaluable to us as far as reaching out to the other departments and everybody within the city and helping us, make sure we're talking to the right person. So in that respect, has been positive.
In theory, once we're really full on into open data, this will be happening in real time. the reconciliations will be happening, we'll be seeing the stuff posted as it happens.
And I believe that's true. It's not, at least from what we've seen so far. Now, again, my focus, because of the timelines that we had, my focus has been on financial statement reporting. And so I'm trying to tie these financial statements back into the underlying records. So we haven't had a chance or the even opportunity so far to go through and look at some of this other information that may in fact be, ultimately the key answer. So as we go through this, we're gonna have better information. We'll understand better, and maybe it's a question of us being able to go back to the department and say, this is the information, and we just want to be able to tie this. How does this reconcile back to, what's in the basic financial statements?
And that's clearly there's also an opportunity for the controller's office to use this and just to build on the great work you're doing already on the open data stuff, which would be great.
Thank
Great
you.
opportunity.
We do incorporate a number of information that we get out of the CAFR, and so once a year we'll also then update kind of these annual figures that we get from our official financial statements as well.
Another question on the risk of material misstatements. What are the key areas? We're talking about them theoretically, but could you name a couple of them just to give us a good sense?
Certainly. When we start talking about risk, probably the first thing that would come to mind is anytime you have an asset or a liability that is significant to the financial statements. So, for instance, the completeness of your recording of liabilities. You've got two major categories within your liabilities. You've got your accounts payable, your compensated absences, et cetera, et cetera. So we have to look at those numbers. We might need to make sure that those numbers are properly supported. Our biggest challenge there is completeness. It's not so much what is recorded. It's a question of what's not recorded, and that's gonna be our challenge.
Like lawsuits?
Correct. We have the whole area of contingencies, commitment contingencies. Now we spend a lot of time. We've been working almost from the very beginning with city attorney.
Because that would get very complicated in this. I mean, the moment you put a risk factor on a lawsuit, you're prejudicing that lawsuit, in a way that we don't want. And so I'm not saying that's what you're doing, but I'm just saying I can see how it gets complex, especially with some of these very large
You have
cases.
to be, and clearly the standards are very clear. We do not only not have to, we will not give anybody an advantage by any type of the disclosures that are going into that. So if the city has its master plan and they think they can settle this, if this is this, none of that would ever be disclosed. Now, but we have to take all of that into consideration as we're coming in through and evaluating, is this a note disclosure item, and it's just, these are the cases, these are the claims, et cetera, and management believes that it's not going to have a material negative effect on the city, versus some of those have to be evaluated and considered to be actual liabilities. Now, once you make it a liability of the city, again, that disclosure doesn't show up in the financial
How do you do
statement.
it like on the Willits case? Without, obviously, I'm not asking you to say anything that you shouldn't, but I mean, that's a very complicated case with big potential liability, but potentially it would be a zero liability. So how do you score that?
For the most part, we're dependent upon the information we get from city attorney. So the terminology that we use goes along the lines of whether it's remote, likely, or probable. And we actually sit down with city attorney and we say, SCORE, help us understand the possibility of this being settled. Which category does it fall into? And secondly, what's the dollar value when it does fall into one of those categories? And then we take all of that information, we summarize that information. Now, sometimes we have to go out and consult too, because it's not just simple of us. We just can't arbitrarily accept what city attorney is saying. For the most part, we can, but if we don't understand it, if it's complex, we're going to go out and we're going to consult to make sure we understand the repercussions here.
So on a lawsuit, you would go out like on the Willits or something like that, which is a big potential number. If the city attorney says, there's a remote chance we'll have to pay anything, you go and check with someone else?
It would not automatically. It would depend on city attorney's explanation. If the explanation makes sense, it's probably not going to be a problem. But if it's in an extremely gray area where, there could be differences of opinion, where it would be very complicated, we've gone to engineers in the past and had an engineer come through and help us understand, what's the potential impact on this lawsuit, or just help us understand the terminology of what the lawsuit is claiming, and is the city attorney's response from this adequate? Does it make sense given that? It'd be that type of.
And then in the audit, you actually put a number in?
The only time you put in a number typically is going to be if you're going to record it as an actual liability. Then it just goes in as part of your liabilities. It would not be broken down, or would not be disclosed. So even though it hasn't been settled yet.
A lawsuit that isn't settled, isn't that a liability?
Not the fact that you've been sued.
Well, the fact that, let's say the city attorney says there is a decent chance we're going to pay out.
Right.
They're not going to say how much because they're in settlement talks.
If the city attorney concludes that the probability is likely, and he says that, it's $2 million, just to throw out a number, then we're going to go back and we're going to see, management, have you recorded this as a liability? And if they haven't, we're going to recommend, assuming this $2 million would be material, maybe it wouldn't be in the city. But if it's material item, we're going to go back and say, should this be recorded? And management's going to take a position. It either should be or shouldn't be. If they decide that it shouldn't be, and we conclude that it was material and should be, that's when we have the potential, audit adjustment that, those would be the types that could impact our opinion.
And all
It doesn't happen
And all
very
that's
often.
in the public record.
No.
Okay. What's shielded from the public record on this?
The communications we're receiving from city attorney are all client protected, client privileged. So there's
What's the
no
number?
one.
When you say, okay, this is a $200 million liability, potentially or likely, that gets recorded somewhere publicly?
For the financial statement purposes, it would just be included in the financial statements. I don't think there would be any public information that would ever come through and say how it's a big number, and included in that big number is that $250 million. It would never be disclosed in the financial statements what that actual number were, which lawsuit that was identified by.
That's good.
So, there'd be very, very difficult, if not impossible, for the parties on the other side to be able to use that information against the city.
What department is responsible for tracking the audit findings? And if there's any recommendations that there are any significant findings, how is that reported back to the council?
There will be findings that will be provided by the auditor at the end of this process.
The significant recommendations and changes that we need to make by department, are those somehow forwarded to the council, or we just expect that someone in the department will fix this so that we don't run into this problem again?
Anything, we have two categories that we are required to report. One is a material weakness, and the second is a significant deficiency. All of those would be disclosed in detail, very detailed write-up. It actually shows up as part of the single audit package, because the single audit, if you're doing an audit in accordance with governmental audit standards, you're required in that single audit package to have your report on internal control for the city as a whole, the financial statements as a whole, and then you also have reports on compliance over the federal funds. So it would actually show up as part of that, that package, what we refer to as the single audit package, and you would see, and we would identify in our opinion, in our report, that these are the items we've classified as material weaknesses, these are the items we've classified as significant deficiencies, and then each one of those items would be laid out in detail where we talk about the condition, the cause, the effect, and management's recommendation or management's position on those. Sometimes management will come through even at that early stage and talk about a corrective action plan. More times than not, they'll just come through and say, this is we agree or we disagree with the finding. There's not outside statutory requirements as to how you track that. Typically, I think historically, when I was here before, it was the controller's office, and they would track that, and they would work with the various departments. At a minimum, the audit standards require that we come back the next year and review each one of those and look at the corrective action and see that it was properly corrected. And if it's not being properly corrected, we're going to report it back to you again. So, and those reports are in fact addressed to City Council, and City Council would certainly be receiving those. But I'm not as familiar anymore.
The
with
actual
controllers
detailed
tracking.
office,
We do follow-ups with departments
make
and
sure
get.
that the corrective plan gets implemented.
We do get updates from the departments, and as it pertains, especially to the ongoing reporting requirements that they have, those issues are ultimately being rectified by departments, and then it gets reported back here, the updated status of that.
Any other questions? Thank you very much, sir.
Well, thank you.
Madam Clerk, are there anyone submit any cards for public comment?
No.
Then with no objections, I'd like to note and file items 1 and 2.
Thank
Thank you very much. Then I move this meeting be adjourned. Thank you very much for coming.
Okay, thank you.